I think the bottom's in, Scott, because last week was a period where the war was getting worse and oil was going up, but stocks weren't going down. So that's a good precondition. And today now we have the rate of change, that the war is de-escalating. So I think stocks are now in the process to go back to their all-time highs, and I think maybe get to that 7,300 that we were expecting this year.
Despite his bullish outlook, Tom Lee isn't ignoring risks. One of the biggest concerns he highlights is an incoming inflation shock. Think of it like a wave moving through the economy. We know it's coming, but we don't yet know how powerful it will be when it hits. This uncertainty creates a critical challenge. If inflation proves temporary, markets can continue higher, but if it becomes persistent, it could disrupt the recovery. Much will depend on consumer sentiment, corporate expectations, incoming economic data. These factors will shape how both investors and policymakers respond.
Now what for these markets?
I think the bottom's in, Scott, because last week was a period where the war was getting worse and oil was going up, but stocks weren't going down. So that's a good precondition. And today now we have the rate of change, that the war is de-escalating. So I think stocks are now in the process to go back to their all-time highs, and I think maybe get to that 7,300 that we were expecting this year.
Wow. So let's just remind and refresh people's memories a bit. You were looking for a strong start to the year, stocks falling into potentially a bear market. Yes. Most of that you pegged to a new Fed chair coming in and some of the issues that might revolve around monetary policy. Couldn't foresee the outbreak of this war and the conflict, et cetera. Does it matter what caused the bear market for how you project your outlook for the year, or are you confident that we had this event, an existential event for the market, it reacted negatively, and now we're going to rebuild our way back?
Yeah, I think things have possibly changed, Scott, because this war pulled forward a lot of repositioning. You know, we know people have gone flat or raised cash, and they were ready to own defensive positioning. And we also had a rolling bear market last year in energy and financials, and this year in Mag 7 and software. So something like 70% of the S&P's already been through a rolling bear market. So I think the possibility is that the summer lull that could happen won't be as deep because we've already fallen 8%.
What's the makeup of the move back towards record highs, like you just said you thought we would do? What does the makeup of the market look like in that scenario?
I think the leadership has been revealed in the last 6 weeks because since the war started, the number one performing asset class has been crypto, Ethereum, and then energy stocks, Mag 7 software, financials. So to me, that's the group that's leading us up. You know, energy went up for obvious reasons.
Sure. Isn't it going to go down now for obvious reasons?
Yes. And then the negative correlation to oil was the highest in almost a decade for the Mag 7, Ethereum, and software. So I think that as oil flattens or cools, or the curve flattens, those names are going to get a bid, and they've gotten already cheap. We know the Mag 7 is trading almost at a market multiple.
When you know, that we sort of banked on the broadening trade, you know, there was a bent towards value, which it had outperformed growth. Is that mostly over now? Because even with oil elevated, we're still going to ask ourselves questions about a slowdown in the economy, right? Or no? And
there's still a shock rippling through the economy.
Which we maybe haven't felt quite yet?
Correct. Yeah, I think there's an inflation shock still coming. I think that the broadening is taking place. The narrowing is, I think, more investors are going to buy U.S. because the U.S. has proven its resilience in this wartime period. Plus, the U.S. makes more money in a war. But the broadening is that more U.S. stocks rise.
Yeah, but if you're telling me the inflation shock is coming, isn't that going to negatively impact the broadening trade?
Yeah, I think it is out there. We just don't know amplitude because, you know, it's like a wave. Like when it hits shore, is it going to be diminished, and are people bracing for it? But there should be some inflation shock coming. It sounds like the Fed is already thinking about, you know, still leaning towards cuts, which is good. We'll get some signal.
Well, right now they feel like they're leaning towards doing nothing for the foreseeable future. And if they believe what you just said and believe, then you must believe that they're going to remain on hold for potentially even longer.
Yeah, and it really depends on if consumers and corporates view this as temporary or a change in inflation. So the surveys will matter a lot, as will the incoming reports. But the Fed fund futures show the market's shifting back towards cuts.
The role of the Federal Reserve is central to this outlook. Right now, the Fed appears to be in a wait-and-see mode. They are not rushing to cut rates, but they're also not aggressively tightening further. However, market expectations are beginning to shift. According to Fed funds futures, investors are gradually pricing in potential rate cuts, but the timing and magnitude remain uncertain. This creates a delicate balance. If the Fed stays on hold too long in the face of slowing growth, it could weigh on markets. But if inflation cools and rate cuts begin, it could act as a powerful catalyst for equities.
The shining light over the Iran conflict. I mean, stocks are down. You see bonds going down. You see gold going down. Bitcoin has been flat to slightly up. And I don't know if you can take a victory lap in the sense of over the last year, it's been the opposite. Bitcoin's been down and those assets have been up. But I do think that people are saying to themselves, well, I thought that Bitcoin was supposed to just be kind of beta to the rest of these risk assets. And so if everything else is selling off, why is Bitcoin not selling off? And so I do think that there's a little bit of light at the end of the tunnel for Bitcoin investors who have been taking a couple of beatings.
Do you think this was just a Bitcoin winter and we're now in some kind of pseudo summer?
I think that volatility has significantly compressed in Bitcoin. It was, an 80, 90 vol asset. Now it's like a 40 vol asset. It drew down 50%. That's kind of what you would expect in that kind of volatility environment. And I think that there's just a lot of people who hold Bitcoin who say, look, I like it at $60,000+, and the geopolitical uncertainty and chaos actually makes me want to own more Bitcoin rather than less because this thing is neutral and isn't subject to any one country.
Is it happening from individuals, or do you think it's through ETFs, or what do you think is happening?
I think it's a little bit of everything, right? One of the things that people have long talked about with Bitcoin is how do we get mass adoption? That was the kind of the phrase everyone used. And this is what mass adoption looks like, is you have individuals, you have companies, you have ETFs, you have countries.
But does that mean that the price discovery suggests that this is not on its way to the moon?
Well, I think
meaning you maybe arguably has been more stable than some of these other things you're describing. But at the same time, we've had Cathie Wood and so many other people, by the way, including yourself, I think, who've talked about, I was thinking about
higher prices.
Tom Lee talked about, $500,000, $1 million of Bitcoin. And we obviously have.
Yeah, I think if you look at gold as a good example, people used to talk about $5,000 gold price, and it was at $1,800, and everyone kind of thought it sounded crazy, right? It will get there. I think Bitcoin is a very similar thing. What the time frame is very, very hard to nail down. But what I will say is just look at the compound annual growth rate. If the stock market compounds at 8 to 10% a year, Bitcoin should do something that is multiples of that.
But are you seeing the corporates? I mean, there was a whole argument that corporate sovereigns, the sort of big institutional money, was going to end up in Bitcoin. And we talked about that almost endlessly around this table about a year ago. And that was what was going to drive the price. And that doesn't appear to be happening.
There's two things that have happened. One is I think that there are a lot of countries who are saying, hey, how do I participate in this without explicitly going and buying Bitcoin itself? And so you see them doing things like JVs on the mining side and stuff like that, especially the Gulf countries. But also you've seen a number of disclosures where country sovereign wealth funds have gone and taken positions in the ETF. And so I don't think it's, kind of this like chaotic, enthusiastic, hand over fist buying of Bitcoin that people thought they were going to do in their central bank. But I do think that there has been, allocations that we didn't have just 2 years ago. And that, it's kind of like a slowly and then all of a sudden. And I think that's probably what we'll see here. For the last decade, I've been coming on here, pounding the table about Bitcoin. It's been one of the best performing assets. I'm coming back to pound the table and tell people that there's a supersonic tsunami of artificial intelligence that is coming to finance. And I think that people are drastically underestimating how quickly things are going to be built, how pervasive the impact on jobs are going to be. And we want to be a pioneer of doing that. We've got a public company that we see as an agentic finance firm. The first product we have is a consumer finance product that basically allows anyone to upload all of your financial accounts, and you can start talking to an LLM with personalized insights for you. We now are taking a step forward. Today, we're launching an agentic research offering. And what that basically means is we are using AI to not only go and do the research, right? AI is very good at sorting through all this data to find hidden insights in financial markets, but the AI is actually creating the reports and going and actually getting it published as well. And so if you think about this, we could publish hundreds of research reports per day. Right. We have one human who's overseeing this entire AI system. And I think that people are drastically underestimating how smart the AI is, but also we can just produce this stuff now cheaper and faster than the humans can at other research shops.
My question to you is, and I don't disagree with you, I think some of the stuff's remarkable. The question is whether the insights become commoditized. Meaning, if you're using Claude and I'm using Claude,
Yep.
whatever product you're selling, I should be buying, because the truth is I could potentially recreate what you've done unless you are some kind of ninja prompter that's doing something else.
I think there's two things that are important. So first is on our consumer finance product, we've built a lot of proprietary AI agents, and we've started to train our own models and do a number of things that are very proprietary and specific for that use case. We'll start doing the same thing on the research side. The second piece of this, though, is there's no monopoly on good ideas. And so no different than a researcher who sits around a table and says, hey, I wonder if the correlation between where the CEO went to school and the stock market performance, let me go do that research, right? You still have to come up with what these things are. And so what we think is really interesting is actually having the AI go and try to figure that out and try to understand where are the things that are most interesting, where are the kind of the hidden insights. And if you go and you look, some of the research that we published this morning at procapinsights.com, you can go and see there's things that no one's talking about yet. For example, what are the 3 companies that are supposed to benefit from both the Iran oil shock and the tariff refunds? Right now, you start to get into this complexity where instead of taking a single narrative, you start to actually try to stack these things on top of each other and look for overlaps.
So what should investors take away from all of this? According to Anthony Pompliano, the signals are becoming harder to ignore. Bitcoin is no longer behaving like it used to. It's not collapsing alongside risk assets. It's not reacting predictably to fear. Instead, it's holding steady, quietly redefining its role in the global economy. At the same time, adoption is expanding, institutions are entering, and technological innovation is accelerating. But perhaps the most important insight is this: the biggest changes don't happen overnight. They happen gradually, until suddenly everyone realizes the world has already changed. So the question isn't whether Bitcoin or AI will shape the future. The question is, will you recognize the shift early enough to benefit from it? If you found this breakdown valuable, make sure to like, subscribe, and stay tuned for more expert insights that keep you ahead of the curve.